In this video, traders, we're going to look at simple ways to use the market depth histogram. Stay tuned. Hey guys, warm welcome to you. So a bit of an introduction to the histogram on the market depth and maybe some simple ways of kind of judging what you're seeing on this. Not going to go too complex in this video, but make sure you're subscribed because we may in future videos kind of talk about some setups from it, some ways to read it, a little bit of nuance, some more advanced stuff. But this is a good starting point. So for those of you not familiar with the histogram, the market depth histogram, it's basically on the order book, the price ladder you get. So you get all the bid, you get the offer, you get the volume on both sides as well. So in other words, you see generally what's available to trade. So for example, we've got the bid here, got the offer. Now normally you'd have also something like the amount of contracts available. So say there's 500 contracts there, there's 300 contracts there, and there's 5,000 contracts. And the same on this side as well. So you'd have the price and the amount of contracts available or shares available at each of those price levels. And the same on this side. But for the sake of kind of fitting it all in, I've just literally taken out the price and forgotten about the contracts that are available at each level for now. So the histogram on the side, which is available on the most market depths on the side, is basically telling you the number of contracts that have traded at that price level. So at 53, we've had 500 traded so far, 52, 200, 51, 220, 225, 70, 850. So just made those numbers up, but this is the kind of sort of thing you would get. Now, when you look at this, the way that you are looking at it is you're saying, okay, well, if there are a cluster of trades, more trades than perhaps the rest of the histogram at a level, it may well become a resistance or support level. And very often, if we had our chart here, very often we would see something like this kind of thing here, very roughly speaking. Okay, so what happens is we've had a lot of contracts trade at 53, 500, and that happens to coincide with our high, for example. So we often find that we get clusters of price at price points on our chart as well. And then down here, we see that we've done a lot here at this 800 level. We've probed through to 49, maybe we've done a few contracts down there, but generally speaking, the majority of trade has been done here. I guess in reality, we'd probably have more chop around this sort of midpoint because we've got 200, 200, 225, but I think you get the idea. The point is, it shows you where trade has done. Now, listen, the interesting thing about this, guys, is that on a chart, normally, you might just literally hit a price and come off. It might just show a few contracts. When you see the histogram and you see good volume traded out there as well, it means a couple of things. It means one, that there's a reasonably solid level because there's buyers. What it does is it means this. If you think about the supply-demand shift, but as we go and we push up, now if we just backed away from it straight away, what's that telling us? Well, that's telling us that potentially buyers have backed off. Now if we go up there and we back off it, but when we see a lot of trades been done, it's telling us that buyers haven't necessarily backed off, just that sellers have overcome those buyers and they've only backed off after they've seen maybe their orders filled. So it's a distinct difference. And so when we see clusters of trade done at key levels, we might want to initiate a trade at that level. If we see price coming back down to this thick area with 800 contract trade at 48, we might want to trade it. And it's not always visible on the chart as well. And I mean, this is a chart where I've done just for example purposes, but we could have been doing a lot of work elsewhere and then come back up and tag that. Let's say we've come down, now we're coming back up, tag that 53 and declined. We might say, well, you know, or maybe we've traded through the 53 and come back. It might not be so obvious that 53 is a decent level, but when we look at the histogram and we go, okay, well, there's 500 trade there. Next time, what am I going to be thinking as the price goes back up? I recognise it's a bit scruffy now. But as the price goes back up, I'm going to be more interested in the 53 level than I am in that high level if there was only a few contracts traded up there. It becomes less important, the actual numerical high, rather the thicker level where I know a lot of people are interested in selling at. And so as the price comes back up, I won't be so surprised if it fails at 53 as opposed to blasting right through, because there's been a lot of trades done there. Now, is it always going to work? Of course not. It could just be one trade that's gone through and it's hit an iceberg's hit a market order, or someone's flashed a big order on, someone's going to take it. So it's not foolproof, as nothing is in trading, but you know, a simple way of looking at it is to say, okay, when the histogram has got a reasonable width to it, we've got a lot of contracts traded at one level, we can say price may well stall there, it may well reverse there, it may well not go through cleanly as it would do perhaps for the smaller price points. And very often the final thing, guys, is that we see, I could probably just fit it here, can't I? We often see if price has gone through a key level and blasted right the way up, we see very thin histogram here, not much trade, and then the reason it stops is because it hits a bit of a brick wall, and that's when we see maybe a lot close to 100, then it starts to back off. And so this might help us in trading as well, because as the price breaks through, it's breaking through. Yes, we might see it as a pause on the chart, but we also might see it as the histogram just going and filling up as more and more traders sit on that offer, and it gets soaked up by the buyers. It's just stalling things. So it might be opportunity to go, right, okay, I'm going to come out now because I see a growing histogram. That's a simple guide, guys. There's some other little complex things and little advanced strategies that perhaps we can do on that. We'll talk about those in another video. But I do want to touch on this now, and just so if you do have access to a market depth or a price ladder, however you want to call it, and you see this, you can kind of put a little bit two and two together and go, okay, well that makes sense. A lot of contracts were done there. What does that look like relative to the chart? Is there any correlation? Is it a fresh level? Is it this? Is it that? And you can make a kind of judgment and assessment from that and perhaps build your own strategy around that. Anyway, guys, that's a simple way to use the market depth histogram. Whatever you're doing, take care. Get your risk managed. I'll see you in the next one. Goodbye.